What is going on, guys? In this video, I'm going to be breaking down the difference between identifying a reversal versus a retracement. This is going to be a fairly short, unedited video, so make sure you stick through the end. It's going to be pretty short. If you can't stick through this video, then don't bother day trading because it's a pretty short video and it should help you guys out. Enough yapping. Let's get right into it. So, reversals versus retracements. There's a couple of steps into identifying what these are and how to actually trade them. Obviously, I typically don't want to trade a retracement because they're not going to be big enough for me to yield a proper trade. I want to trade trades that are making sense to me, high quality trades that are only setting up once per day max usually, and really giving a good enough sizable amount of a move for me to make money off of and have protected risk and still be able to take profits. So real quick, I'm going to use a couple parts of my entry model and strategy to break this down. But if you want me to actually send you a video that breaks down my entire day trading strategy that I've been using every single day for the last 4 months to become profitable, and a checklist PDF to break it down and go along with it, just go ahead and check the link in the description of this video, and I went ahead and linked it right there. Just fill that out and I'll send you a video and a checklist PDF for you to go ahead and take a look at that breaks down my entire day trading strategy in about 13 minutes. So, enough yapping again, but let's get right into it. So, first thing we want to identify is, before any of this, is the actual daily bias of the market. You can do this literally by just zooming out. So let's say we're looking at this trade that we took, that me and the team took. Before this trade, what are we looking at? Price is coming up, right? We're coming up. If you go to the hourly, the hourly is now in bullish structure, okay? We're making higher highs, higher lows, higher highs, higher lows. You have a beautiful wick right here that took out a bunch of liquidity down here. What do we want to look for now? A higher time frame fair value gap. Okay, so we want, since we're in bullish structure on the hourly, we're most likely going to be looking for a continuation, right? So knowing that it is a retracement against us and not a reversal. Because if we were to see a reversal, we would see a short setup, and I do not want to see that because I'm bullish. So I want to see a retracement, but I'm not, but I'm not going to trade the retracement, okay? So how do you identify this? First, identify a higher time frame fair value gap. For example, on the hourly, you go on the hourly and mark out your hourly fair value gap. So we have one down here. Let me draw it out. One right here. Bear with me, guys. This is going to make sense in a second. One right here. Draw it out. Now, second step, not this one, but a second mini step is we wait for price to retrace into it. Okay, this is a high probability area for price to keep continuing. First, we rebalance by tapping into it, and then we continue. So what do we want to see? Price tap back into it, and then we proceed to continue. So we want to go on the 1 minute again. We want to find that level. There we go. We tap back into it. Now, we don't know if this is a reversal. This could easily be a reversal and you don't even know it. But since we are bullish on the day, we want to only trade a long setup, right? So, how do I know this is a retracement for a continuation rather than a reversal for a damnation? All right, this is how you do it. So you always want to wait for confirmation. This is super key. Before entering a trade, wait for confirmation of price going in your direction. What's the first step of price heading in your direction? Price is starting to build structure on the lower time frames in your direction, right? So that's exactly what we want to wait for. So here, as you can see, we're still making lower lows. We're still making lower lows. You want to see price break structure to the upside. Now, there's two ways to look at this. First thing I want to see is an inversion gap to my direction. So I want to see displacement to the opposite of my direction first, and then we invalidate that displacement with displacement in our direction, with more or equal strength. Okay, so here, as you can see, we generate a bearish fair value gap right here. Extend it. Bearish fair value gap. We inverse it by closing above. Now this, what does this tell me? This tells me that price has now rebalanced, but now the bulls are stepping in ahead of the bears, okay? Bullish price action is about to kick in. We're delivering off of a strong bullish area. We have retraced. This is not everything though, not yet, okay? We still need one more step, either a break of structure or change in the state of delivery. Now the change in the state, look at the last leg down that was formed, right? This one. The candle that birthed this move down. This red candle right here. We want to see a candle closure above that. As you can see, we get that right here. Okay? We also inverse this gap right there as well. Okay? So those are the things I want to look for. Wait for confirmation. Now we're ready for a long setup. Enter in, you can enter on the close, stops at the swing low if you want. But if we're delivering off of an hourly fair value gap, and you see this, this is a power move. This is a snipe. Okay? That's gonna yield and yield and yield. Okay? You can easily get a 2R from this. And as you can see, our stop still doesn't get violated ever. Okay? Till like days later. So that's a strong move that you can use to identify retracements versus reversals. If you want to confirm reversals now, you're gonna do this. For reversals, let's say we have that same hourly fair value gap, right? Instead of this happening here, let's go ahead and look for a better example. We want to see an inverse on the hourly. An inverse on the hourly would tell me that we're good for a reversal. Boom, right here. Let me draw it out. We got this gap right here. We finally closed below it. Let's see what it looks like on the smaller time frame. There's a random ass example. Let's see if we can break this down. I'll go back to the hourly. Alright, so looking at the hourly. Oh, we're further back. There we go. We're right here. Alright. So let's go ahead and mark these two out. Boom, boom. Go back to the 1 minute. I always start looking at the 1 minute, scale up to the 5 minute, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. Alright. There we go. Oh. Deadass can't see it. Well, let's see if we got one right here. I'm sorry. Alright. So, let's see. Oh, this is perfect. Okay. So, here we go. We have hourly fair value gap. Alright. Now, let's go down into the lower time frame. Let's drop into the 15. Let's see if there's a 15. There's a 15-minute gap right here. I'll draw the 15-minute gap. Boom, boom. It's a nice one right there. Now we drop down to the 1. Let's see what price gave here. So, as you can see, we were bullish before for a while. Now, if we're looking for a retracement or a reversal, what are we looking for? So, as you can see, we start closing below this gap. What are some signs that we want to see? Now, we close the hourly here, but we also have a 15-minute. When we have a 15-minute, look at the 1 minute time frame. That's the one that aligns with it, the 1 minute. So when we look at the 1 minute, what are we getting here? We see, now there's going to be a lot of boxes on here, but we have a 1 minute fair value gap right here. What happens with it? We respect it. That's a good sign. Now, what do we want to see next? We have a bullish gap right here. We want to see this get invalidated. Okay? We want to see that get invalidated. And then, again, what was the last leg up before this move down? Right here. We want to see a candle closure below here. And as you can see, we end up getting that. And as you can see, only when we get this candle closure below is when we continue to dump. We didn't get it here. Finally do right here. This confirms that price is ready to keep going down. Using fair value gaps. I'm sorry, my throat is like hurting. So we have this gap. We inverse it right here. We're not done yet. I want to see a change in the state. The last leg up was this one. So, change in the state. We end up closing right here. Now you can enter in that short and continuation. So, and there's different ways to look at this. So this was a retracement, but if you zoom out, this was a reversal. Okay, so it just depends how far out you're zoomed. Now, enter in right here, short, set it up, we end up tapping right back to it. And then it would use these highs right here. And then look at that, look what you get. You get nice move down, right? So 2R would be all the way here. Easily get that. Using the last swing high, right? So yeah, that's pretty much how to catch reversals. Again, I'm sorry I didn't talk too well. My throat kind of hurt. But if you guys want to trade live with us every single morning, we have a 7-day free trial as well. Just sign up with the link in the description for the strategy checklist. And it'll also let you join our free Discord that you can watch us trade. And we post the trades every single day. These are the trades I post every single, oh my gosh. I post every single day, every single trade we post, every one that we take on this Discord. So if you want to see this, make sure you guys join the Discord, okay? Anyways, other than that, I'll see y'all in the next video. This is not one of my best videos, but make sure you drop the like and subscribe if I helped you guys at all on how to find confirmation for your entries. Instead of trading retracements, trade continuations after retracements, or trading reversals, okay? I'll see you on the next one.